Hey guys, Joe here from Charting Store. It's Sunday, the 29th of October, and here's another market update about the German DAX and the major US markets. I haven't done a video for quite a while. I was suffering from some health issues and I was quite busy with some other projects. So let's hop straight into the charts. It will be a quickie today. I don't really have that much time. I would like to start off with seasonality because I've seen that quite a lot on X, and most people talk just about that regular pattern, which is the same for every year. It is the same, and it doesn't really consider the US election. And what you see here is it's a chart from Season X, and it's a 4-year election cycle of the Dow Jones. It got here the election, the post-election, the midterms, which were last year, and this one here got very close to that low we saw in October. And here's the year we are in right now, the pre-election year, and we can zoom that in. Yeah, for some reason it changes the color, but I hope you still are able to see that. So this is the whole year now, and we're here in October, and as you can see at the end of October there should be another rally, and the bottom should be somewhere found here between the end of October and sometime in November before we get our Christmas rally. And we also can have a look at the DAX. It's basically the same chart. This chart here is from Dimitri Speck from seasonalcharts.com. And this one also considers the pre-election years of the US, and it considers the DAX. It's data from 1959 all the way up to 2011. And you see also a low should come sometime here at the end of November. That is what seasonality tells us for this year. Okay. This update contains only daily and weekly charts. I won't show smaller time frames, otherwise it gets way too long. You can check me out on Twitter, which is called X now. I show usually smaller time frames there, and most of my followers are more than satisfied because I nailed pretty much most turnarounds there in price and in timing. And if you don't believe me, you can check out my timeline there. I don't delete any posts, so that stuff is actually for real. What you see here now is a weekly chart from the DAX, and it shows our cycles. Our primary cycle started here on the 3rd of July, and it topped out in week 4, which was quite early at the end of July, and then it came down. It found a secondary bottom here in the middle of October, which marked a major bottom in week 6. We rallied for 2 weeks. We topped out again for another major cycle, or we can call it also a sub-cycle. And we found a bottom here in week 13 of that second sub-cycle of that whole primary cycle. And if that pattern continues, we should find a bottom sometime here at the end of November. And remember that seasonality chart we were looking at, that would match quite well to that cycle pattern we see here on the weekly chart. Okay, this chart is basically the same. It's a daily chart. It also shows the primary cycle start. It shows the first time length of that first sub-cycle, which was on the 18th of August. So it's a bit more accurate here. Then we found that bottom. It was 3 days late. But you can't really make it that precise at the beginning of October. And we know that third sub-cycle, which started here, it turned in bearish already because we were cutting that low from the beginning of October. And presently, the low was at 14,623, and I don't really think that we are done, because that cycle suggests another week as a minimum, or like another 2 to 3 weeks as a maximum. And remember that seasonality chart again, that matches that quite well. And also pay attention to these two lines. It shows the 50-day moving average in green and the 200 moving day average in yellow, and you see a crossing here, which is usually defined as a death cross at that, pretty much here at that top we made in October. And once I zoom out, we can check once we had that death cross the last time. That was in February of last year, and after that we declined basically the whole year until the end of September. So keep that in mind. It doesn't mean we're declining straight away, but it could be another of these warning signs you should take seriously. And here's another cycle chart of the DAX. It got a different pattern method I use, and this one also suggests a low at the end of November, so this matches the previous charts quite well, and also seasonality. This chart, also a daily chart, it's the first one which considers price, and I was giving you these levels here as a minimum target already sometime in September. I said the first time we hit that level at 15,190, the best case we have a close below and we rally up. This one here was quite tricky. We got to that level, but we didn't close below it. We rallied up, and then a week later we dropped below that level, and we were actually holding price below that level, which gave us a confirmation to hit 14,824 all the way down to 14,676 as a minimum. And it happened. We rallied up. I was shorting that market heavily. You can check it out on my timeline. And then we dropped into our minimum target. And now the question is, are we looking here for like a double bottom? I can tell you the futures actually kept dropping with the US markets on Friday. And I try to catch a little bounce there, but I think it's a bit too early. Yeah, keep in mind that we still have the 161 expansion at 14,358 still open, and if we keep dropping on Monday or next week, have that level in mind. Yeah, and here's a little hint for next week or the following week. What you see down here is the VDAX, a daily chart again, and you can see here that the VDAX came actually down a lot for that little tiny rally we had just at the beginning of last week. And have a look at the VDAX for next week. If it doesn't come up as much as on the 23rd of October, but DAX keeps dropping into lower lows, we see a divergence here, which could be quite important. And usually once we hop out of these Bollinger Bands at the VDAX, it's usually good for like a 300 points rally as a minimum. Keep that in mind. And this one here is my last cycle chart. It's a 4-hour time frame. I would like to show this because this could be quite important for next week. This one here suggests a low on Wednesday, I believe it is, on the 1st of November. It has a tolerance already for Tuesday or until Thursday. I marked this level here because it fits a daily, the 78.6 retracement at 14,377. So mark this level and that date. Okay, one more chart because it's actually important for next week. It's a 1-hour time frame. This one here shows the JFD indication. It's pretty much the same as the cash levels. And I want you, because we haven't hit that on Friday, these levels at 14,577, and also the red target, we hit the minimum area. But there's also 14,519, which we could see next week. And then there's a good chance that we actually bounce up from there. And now we continue with the US markets. Remember the first chart I gave you here of that show from the Dow Jones, that seasonality chart. It wants a low sometime now, and you have to take into account sometime in November as well. This one here you see is a so-called NIMO. It's a New York Stock Exchange Macallan oscillator. It gives you the ratio between advancing and declining stocks. And the US market, they run a bit different from the European markets. The European markets, especially DAX, it found a bottom here and it started a new primary cycle which turned bearish very early. The US markets, they finished their primary cycle a month later in the middle of August, and then they started rallying. And have a look what the NYMO did. It kept making higher lows while the stock markets kept making lower lows. They were dropping into October, they rallied, and they were cutting this low here again, which makes this one here to become a triple positive divergence. And usually these things happen when the market is looking for some kind of bottom. This one here is basically the NYMO for the Nasdaq. Same thing, low, a higher low, and another higher low while the market kept dropping. And the same for the Dow Jones. This one is a bit different. It made a low here, but it made a lower low. But now we need to look that we are not cutting these extremes here at -120. As long as the NYMO from the Dow Jones Industrials is staying above that level, we get a positive divergence here as well, while the index makes new lows. And another nice thing to look at is the NIM. It's the positioning of the portfolio managers, and you see they actually started to sell very aggressively. And once you check out the numbers, that -200 is telling us that they are leveraged short. So they completely switched around their portfolios. The same for the AA. That sentiment from the retails also turned around and is quite bearish now. But let's hop into these charts. Yeah, daily chart from the Dow Jones Industrials. I had this very nice looking Wilbur wave wedge here. I gave you a warning sometime here just before we made that peak. And as you can see, we kept dropping and we're hitting the target line a couple of weeks at the beginning of October on the 2nd. Another thing to look at is that we are shooting through that 100% level at 33.010, and that opened a minimum target zone of 32.284 all the way down to 31.990, and even 31.360 could be an option. Once we zoom out here a little, that low we made in March fit that 61.8 retracement quite well. That's a retracement from the low we made last year in October all the way to that high here at 35.762. We were hitting that 38.2 already, and the 50% could also cause a little bounce at the industrials. Okay, let's start off with the Dow Jones Industrials, the daily chart, cash levels, and here you see in red that Wilbur wave wedge which fired and was hitting that target line on the 3rd of October. We also had like a inverted shoulder head shoulder pattern which started to fire and then it failed. I gave you just in time that Wilbur wave wedge somewhere here just before we marked that high. And I warned you, and now you see what happened. The 33.010 level got hit, and it triggered another bearish sequence. We were bouncing off that level, and now we actually got that confirmation that we closed below there, and now the minimum target area between 32.284 all the way down to 31.990 is now active. Even 31.360 might get hit later on. It fits quite well to that low we made in March, 31.429, and it also fits the 61.8. It's that rally from last year October all the way to that high. We retraced already 38.2, we bounced off. We probably see another bounce here at the 50% retracement, and we probably find a bottom here sometime in November at 31.341 if our plan works out. Yeah, switching back into the weekly and talking about cycles, we found a primary cycle bottom here in August. We rallied for 2 weeks, we made a primary cycle top here in week 2, and then we failed quite early, and that whole thing turned bearish. This is the 3rd, 4th, 5th, 6th, 7th. So this is the first subcycle low here at the beginning of October. We rallied up and we failed again. Now we have to look where this next subcycle is going to bottom, and usually it takes up, or it's a time between 5 to 7 weeks. So we could drop all the way down here into November, start another rally before we come down here, considering cycles. And by the way, a big cycle here for the Dow Jones wants a low sometime in January next year. And here's another daily chart from the Dow. You see here that big Wilbur wave wedge with all these targets lines, because there are a lot of smaller Wilbur wave wedges in there. This one here was the one I just showed you, and we were just about to hit another one. And I put up here connecting leg B finished. And what do I mean by that? Once I zoom out a little, this is here that all-time high we made in January 2022. Then we corrected all the way down to that low in October, and now we were running in a so-called correcting B leg as a running flat, and now we are actually looking for another drop as this one, if that theory works out. This is the Nasdaq 100. It's a 4-hour time frame, cash levels, and this is one of my favorite charts because I gave you that high here almost perfectly at the end of August. I said as long as this gap stays open, short that market, and I gave you a projected path. I took it out now, but that level here where you see that yellow circle, that was our target, this 161.8. Worked out perfectly, and we got a huge bounce from there. And now we dropped below that level, and keep an eye on this area here between the 138 and the 161. 14.032 all the way down to 13.708 for next week. We might hit that and see another intense bounce from these levels. Last chart for today, the S&P 500 weekly time frame, and I just wanted to show you these cycles where we are. We bottomed that primary cycle in the middle of August. We stalled that new primary cycle after 2 weeks, and then we found a subcycle bottom in week 7. We stalled that subcycle again in the middle of October. That means that subcycle turned and bearish already. That whole primary cycle turned and bearish already very early, and this dropping should continue into November before a bigger relief rally should start. If you're into these crossings, there's also a death and golden cross theory on the weekly time frame, where you consider the 50-week moving average and the 100-week moving averages. This one here was a last death cross signal, and it actually failed. Now we have a golden cross signal, which could be another fake. I don't really like these crossings, but if you're into it, you can have a closer look on those. Yeah, that's it for today. I hope I helped you out a little. Please understand that I don't give you that much information for free anymore. I'm building or I'm actually working on a service I should offer you anytime soon. Yeah, it actually considers a lot of work until all these features work properly, and I will update you on X. Yeah, have a nice remaining Sunday, and I see you next week. Bye bye.